Hello and welcome back to the IDG Corporate Update. Today, I'm delighted to welcome back Jordan Trimble, President and CEO of Skyharbour Resources. Jordan, it's great to see you again. How are you doing?
I'm great. Thanks for having me. Looking forward to catching up.
Yes, as always. So, yeah, very excited to catch up with you today. Uranium was a star performer in a very challenging market last year and continues to trend upwards as demand for uranium grows, with the world shifting back to nuclear power and also some hiccups in the existing supply chain. What are your thoughts on the uranium market on a macro level? It's off to a very strong start, but why should investors be paying attention to this sector?
Well, yeah, as you pointed out, it was the top performing commodity over the last 12 months, rising to prices that we haven't seen since the mid 2000s, trading over $100 a pound, up about 100% in the last 12 months. So it's a very exciting time for the commodity, obviously for investors that have exposure to the commodity, and for the mining companies that are, in our case, in Skyharbour's case, we're in the business of going out there and finding new deposits, delineating these resources, and ultimately de-risking them for an eventual sale. So when we look at what's driving this metal currently, and what I think will continue to push the price higher, some very compelling underlying fundamentals, supply-demand fundamentals. When we look at the demand side for uranium, primarily used as nuclear fuel for electricity generation and nuclear power. When we look at the numbers globally, we have annual demand of about 195 to 200 million pounds of annual demand or consumption. And that's in the backdrop of a primary mine supply side that's only producing about 155 to 160 million pounds of annual primary mine supply. So the market's very much tightening up. The abundance of inventory, secondary supplies that we've seen that have suppressed the prices in previous years is dwindling. And as a result of that, we're seeing this march higher. You couple in this nuclear renaissance that we're seeing, as you pointed out, we're seeing this shift back to nuclear energy as the only source of emissions-free base load, meaning 24/7 reliable, scalable, affordable electricity generation. When we look at many countries around the globe and their decarbonization objectives, nuclear has to play an integral role in that. Just recently, the COP28 conference in Dubai, over 20 nations pledged to triple nuclear capacity by 2050. So there's a big push towards nuclear energy. And one more kind of recent development in the last year or two, we're starting to see utility companies sign contracts and agreements with big tech companies to power their data centers with nuclear energy. Constellation, being one of the larger US utilities, has signed an agreement with Microsoft to power their data centers using nuclear energy. Constellation came out with a report recently that estimated that the energy consumption from this burgeoning AI industry could be 5 to 6 times that of the electric vehicle electricity consumption in the United States. So this is a major new source of potential demand and electricity demand that's going to be coming on. And in particular, nuclear energy, which doesn't require much land. It's highly energy dense, is a perfect suitor to provide this new source of clean electricity to power these data centers and this industry going forward. So increasing demand in the backdrop of a supply side, like I said, that is strained right now at best. We're seeing this necessity, this need for new supply to come online, and we just simply do not have globally right now any real meaningful new supply that can come on in the next few years to meet this growing demand and to fill that supply gap. And then just to exacerbate that, we've got the geopolitical conflicts globally that are further stressing the market. You have a Kazakhstan, for example, that represents over 40% of global primary mine supply. And then you've got Russia as well, another about just under 10% of global primary mine supply. Parts of Africa like Niger that represents a meaningful amount of supply. There was just a military coup there. So a lot of the production globally comes from less favorable jurisdictions for Western utilities to be buying from. So we're going to see the shift in Western utilities in particular to have to be less reliant on these Eastern suppliers. In fact, we're already in the U.S. seeing that happen with, I think what will soon be, it's just working its way through Congress right now, but a proper ban, a formal ban on Russian uranium imports into the United States. So we are seeing this transition, and it's all bullish for further price increases in the uranium price. We saw this commodity trade as high as about $140 a pound in 2007. That's over $200 a pound in today's prices. So we'll see where it goes to. It's always tough to predict these and forecast prices, but I think there's still a long runway ahead of.
So 2024 is off to a busy start for Skyharbour specifically. You've had 4 press releases out in the last few weeks announcing both property acquisitions, drilling programs. Can you give us an update on how things are going? You're a Canadian-based uranium exploration company, so there's obviously some advantages to being in a safe jurisdiction as well.
Yeah, look, we're gearing up for what will be our biggest, probably most transformational year yet as a company. We've been around for 10 years. We've been building up the company over the last decade. We're now, by acreage, the 3rd largest mineral tenure holder in northern Saskatchewan in a region called the Athabasca Basin, which is the highest grade depository of uranium in the world. Some of the largest companies are operating there. So we've been around for a while. We have now over 1.2 million acres across 25 uranium projects. These properties range from earlier stage exploration properties right through to more advanced stage exploration assets that either host small uranium deposits and or high grade multi-percent uranium in previous drilling. There's 2 projects that we're primarily focused on. We call them our co-flagship projects. That's Russell and Moore Lake. They're adjacent to each other. They're just south of the largest, richest uranium deposited mine in the world, the McArthur River Mine, and just northeast of one of 2 operating mills in the region, the Key Lake Mill, and adjacent to our Russell Lake project to the west is the flagship project of a company called Denison Mines. It's a New York listed large development company. They're our largest shareholder and corporate partner. Their president and CEO, Dave Cates, is a director of Skyharbour. So these 2 advanced stage exploration projects that we're actively advancing and currently drilling really are the focus for us. And that's going to be the main source of news flow as we advance these projects through drilling over the next several months, really right through actually into the end of the year as we're fully funded and permitted for about 20,000 meters of drilling at these projects. We're also working on a resource estimate at Moore Lake as there's a small high-grade deposit there. So lots to look forward to with our 2 main assets. And then as a secondary part of our business as a result of having such a large property package, which, as you pointed out, we've continued to add to, we do what's called prospect generation, which is kind of like what a tech incubator would do for tech companies and startups, where we go in, we invest in and acquire mineral uranium properties in this region. We'll effectively incubate them or advance them to a point where we can look for a partner company to come in, and then we'll either option or sell the project to the partner company, typically structuring it as an earn-in option whereby through cash and share payments annually coming into Skyharbour from the partner and with them funding the exploration and development work at the project, they can earn a majority interest. We typically keep a minority stake in the project and an equity stake in the company as well. So we have 7 partner companies currently, 2 of which are joint ventures, one with France's largest uranium mining and nuclear fuel company called Uranium. They're the operator at the Preston project, and they're planning exploration this year. Another joint venture with a company called Azincourt. They're planning drilling as well this year. And then we have 5 companies that are still actively earning in at 5 of our other projects, making cash and share payments to us annually and funding the exploration. We're expecting several of these companies to be drilling and exploring this year, generating lots of news flow for Skyharbour and our shareholders. So we're really trying to build the company up to be a one-stop shop for investors to get exposure, not just to the commodity, to uranium, but to high-grade exploration and discovery potential in the Athabasca Basin across several projects, not just our 2 main projects. And we're using other companies' money and to help fund the advancement of these other projects is, again, a part of our prospect generator business. So we try to keep the equity dilution in check. So it's a very exciting year ahead for us, both at our 2 main projects, Russell and Moore, as well as at several of the partner-funded projects. There's going to be a lot of news flow. It's going to be a very catalyst-rich year for the company. And needless to say, with this rising tide in the uranium market, it's a great time to be looking at this commodity and to have exposure to this energy metal.
Absolutely. Well, it's great to see such momentum for Skyharbour and also for the sector. Jordan, thank you so much for this update. We look forward to continuing to follow your story.
Thank you very much.
Bye for now.